Okay, so today is day one. Okay, so right from today, we'll follow the schedule as how we have planned it. So today is day one, and what is today's date is? It is 16th of May 2023. Okay, fine. So the topic which we are going to discuss today is accounting for partnership. Okay, accounting for partnership firms, basic fundamentals. You can take the notes parallelly side by side, need not wait for the instructions. Okay, wherever I'm asking you to hold on, there alone please you can hold on. Okay, otherwise you can keep start taking the notes also. So today the topics what we are going to
Okay.
discuss, okay, the contents that we are going to discuss today are, okay, these are the contents which we have planned for the discussion. First one is meaning and definition of partnership. Okay, meaning and definition of partnership. This is first. Then the second one is about partnership deed and its importance. Partnership deed and its importance. The third area we'll be discussing upon the provisions affecting the accounting treatment in the absence of partnership deed. Provisions affecting the accounting treatment in the absence of partnership deed or in the absence of deed. And finally, the last segment for today will be discussing upon the charge against profit and appropriation of profits. So we'll have a term called charge against, or we say charge on profit. Okay, so charge against profit or appropriations of profit
So provision affecting the accounting treatment in the
in the absence of partnership deed or in the absence of deed.
okay.
Okay, so
Okay.
charge against profits or appropriations of profits. So these are four important things that we are going to discuss today. So first, let us discuss what is a partnership business all about. As you know very well that it is a business where we initially required two people to carry on the business, and it is a business which has been set up to carry out a legal business, not to carry out any illegal business. So first, as you know the meaning, okay, it is a business carried on by minimum two-person. So when I say the meaning of partnership, where you have to understand that how many people is required initially to carry out a partnership, and what is the minimum and maximum criteria, and we'll go for the definition. Okay, so partnership business is a business carried on by two or more people. Okay, business carried on by two or more people or members, you can say in any way. Okay, carried on by two or more people. Okay, with the intention to earn profit by running a legal business. Okay, so partnership business is carried on by two or more people. Okay, to earn profits. Okay, by carrying out a legal business. So this technical term legal business is very important, and the main objective is earning profit and required two people, minimum is two. So this two refers to minimum number of members, and when I say more, this referring to the maximum, and according to that the maximum number of partners required to carry out a partnership business is 50. So the count, we can say like minimum we require two people, minimum two-person, and maximum requirement is 50, 50 members. Am I making sense to you with respect to number of partners required to carry out the business, minimum and maximum?
Yes, sir.
Okay. Now let us try to fit the definition of partnership. What is the definition?
Sir, but maximum will be changes as optional, sir. We can have how much of a partners we need, sir.
No, the maximum should not exceed 50 kana. That is a limit.
Okay, sir.
Okay, so there is a limit
Okay.
which is being provided. Okay, and there also if you see there are many confusions which arises. Okay, like one they say it is by the rule 2014 rule, or which rule, according to which rule it is set as 14, I mean sorry, 50.
Mm.
If you just look into the textbook page number 1.2, it is mentioned very clearly like maximum number of partners. The Partnership Act 1932 does not prescribe the maximum number of partners in a firm, but however,
The page number?
1.2 kana. If you are using 2023 edition,
I'm using
the
2023 edition, sir.
the previous edition, even though it will be in the second page only, not an issue.
2023 edition.
Yeah, 20
2023.
edition, the second page, 1.2. If you can see, there is a, okay, I'll just refer it here. Okay, if you
Yes, sir.
see here, maximum number of partners. So as you know, like in partnership, this particular act, Partnership Act 1932, is not prescribing any maximum number of partners. It is not prescribing, does not prescribe the maximum number of partners in a firm. But still, it is a Companies Act of 2013. Through this particular section, section 464, it empowers that the central government to prescribe the number of partners in a firm subject to a maximum limit of 100. So that means the Companies Act 2013 is insisting the central government to nominate or to empower the maximum number of partners, but there they are kept a limit as not to exceed 100. So considering this, the central government have prescribed the maximum number of partners in a partnership firm is 50 through this particular rule, Rule 10 of the Companies Miscellaneous Rules Act of 2014. Now can you able to understand? So 2013 Companies Act has given the direction to the central government to declare or to nominate the number of partners, there is a maximum number of partners can be in a firm, and they have kept like you can have, okay, a range of 100, but they have restricted it to 50, and this is through this particular rule 10 of the Company's Miscellaneous Rules 2014. So if they say what is the maximum number of partners according to the Indian Partnership Act, if they ask, there is no maximum number of partners according to the Indian Partnership Act. It is only according to the Companies Act. I'm making sense to you?
Yes, sir.
Okay. So most important, the business, this partnership. Okay, the partnership business is being purely governed by the Indian Partnership Act 1932. So we will be learning that we have an act. Okay, Indian Partnership Act of 1932, that is governing this business. So the partnership business has been governed by the Indian Partnership Act 1932. Okay, and that doesn't prescribe any maximum number of members. Okay, so Indian Partnership 1932, okay, does not prescribe. That is very important. Okay, it does not prescribe any maximum number of partners in a firm. It is only the Companies Act 2013, and through which particular rule, Rule 10. Which rule is applicable? Rule 10. And which act? Miscellaneous Rule Act of 2014. Am I making sense to you? Because these
Yes, sir.
things can be asked in MCQ like true or false or match the following in that way. Okay, now let us discuss about the definition of this partnership. So, in partnership, there is only one definition. It is defined by the Indian Partnership Act of 1932. Okay, so definition is given by Indian Partnership Act 1932. So, the Indian Partnership Act 1932, in that you have a specific section, section 4. Okay, so the definition of partnership is given in section 4 of Indian Partnership Act 1932. According to that, what is the definition? Partnership is nothing but it is a relationship between the persons. So basically, what they're trying to say, okay, let us make it clear. Okay, definition is very simple. Partnership, okay, is defined, or partnership is the relationship between whom? Between the persons. Which person, if you ask? It is between the person who have come forward to take over the business. So partnership is the relationship between persons who have agreed, okay, who have agreed to share the profits, okay, to share the profits of a business, to share the profits of a business which is being carried on by all, carried on by all, or any of them acting for all, or any of them acting for all. Remember, the definition can't be changed according to our convenience. It should be as how it has been given in that particular act and section. So we can't change it according to our convenience. So here the key terms, if you see, it is nothing but a relationship. Okay, when you have more than one person, you try to build up a strong relationship. So it is nothing but a building up a relationship between the persons, and they have agreed to share the profits of the business, and the business has been carried over, that has been taken up, or it has been run by all the people, or anyone taking the responsibility on behalf of all. So carried on by all, or any of them acting for all. So that's why I said here the main objective is to earn profit. So it is to earn profit. So that's why it said here, okay, it is a relationship between the person who have agreed to share the profits of the business carried on by all, or any of them acting for all. Any doubt in the definition?
Sir, in partnership firm, they also share the losses, no, sir, but why they mention only profits?
Okay. See, the ultimate objective of any businessman is always to earn profits only. Of course, losses will also come, okay, but they are not given the negative aspect of the definition, so they are said only as a positivity. partnership is a relationship between the persons who have agreed to share profits, but they are not mentioning profits only. The definition have not mentioned it specifically that it is to share the profits only. It is said like profits of a business. Yes, even if loss comes, loss will also be borne by the partners. They will be sharing them. Okay, so since we don't
Got it,
want to
sir.
build up a negative aspect in the definition, so they are given as a positive note. Okay, it is a relationship between the persons who have agreed to share the profits of a business carried out by all or any of them acting for all. So these are the keywords which I have underlined here. Please make a note of these keywords because if in case you forget to write the entire sentence, if you remember the keywords, for the keywords they may allot some marks. So it is better to fetch marks by at least writing the keywords wherever there is a possibility rather than losing the marks. Okay. But please ensure that you don't okay give up such an easy question where the definition is being asked now. Okay, these type of questions they'll ask in 3 marks to the maximum. Define partnership. So if they ask in 3 marks, then it's easy for you to take over. So again, I repeated. Please repeat along with me. Partnership is nothing but it's a relationship between persons who have agreed to share the profits of a business carried on by all or any of them acting for all. So it's a very easy definition. Please read twice, thrice. You will able to recapitulate it. There is nothing so difficult to reciprocate it. It is so easy. The definition is very easy. And most important, it has been said by the Indian Partnership Act of 1932 in Section 4. So these are the keywords. So Section 4, Indian Partnership Act 1932, relationship between persons agree to share profits of a business carried on by all or any of them acting for it. Now they may ask you, what is that relationship? That is business carried on by all or any of them acting for all. These two sentence or these two will give a meaning to one particular or one important relationship that exists in partnership. That is, any idea? Any idea?
No, sir.
Principal and agent relationship. Have you come across this term in your 11th standard business studies? In partnership, there exists principal and agent relationship. Okay, so here,
Yes, sir. Yes, sir.
okay, so this particular sentence, profits of a business carried on by all or any of them acting for all. What is the relationship that is exhibited through this sentence or through these words? If they ask, it is nothing but the relationship is principal and agent. PLE will come or PAL will come. For principal, what is the spelling?
PLE, sir.
P
PLE, sir.
PLE or PAL?
So PAL is teacher, sir. That principal become.
Oh,
PLE is for normal principal.
okay. Is it so? Correct? How about
Yes,
you,
sir.
Sai
I
Roshan?
scored. I scored. No, sir. I scored mistake in that question, sir. For
Okay.
some principal word, I wrote principal.
Okay. So PRINCIP
PLE.
PLE, right? Principal and agent relationship. Okay, this is the relationship that exists between the partners. And what is most essential to set up a partnership business? What is very important to set up a partnership business? If you have what among the partners, then you may go for a partnership business. I'm sorry here. I want to make it clear. It is not PRINCIPLE. Okay, PRINCIPAL. Okay. It is Principal, my dear.
Sir, principal, full principal.
Not school principal. Okay,
PAL, not full principal.
I'll show you here. I'll show you here. Look here. Business carried on by all or any of them acting. Okay, for all of the partner acting for all. Business of a partnership can be carried on by all partners or by any of them acting for all the partner. In other words, partners are agent as well as
Principal. Principal.
okay.
Principal.
So that's the reason I again and again asked you. Okay, it is
PL.
Principal. Okay, please correct it off. Okay, so the relationship that existing between the partners is principal. Principal.
PAL. PAL.
AL. Okay, so these things will also cut your marks. Okay, so that's why you have to be very careful. Principal agent relationship. And what is essential? This is as per the relationship. The essential is what is essential to set up a partnership business. To set up a partnership business, what is very essential?
Partnership deed.
That is deed. That's second. But
Fund.
only
Capital, sir.
only if you okay get into a partnership business you'll go for preparation of deed. So to get into partnership business you should have something that is very essential.
Partner, sir.
The partners are there, but what you should have among the partners, what is essential that you should have among the partners?
Ethics, documentation,
No, no,
agreement.
no.
Fund. Capital, sir.
That's all secondary. The most important thing.
Trust.
Very
I
good.
don't know, sir.
Very good.
Seriously, sir?
Mutual trust. Okay, you should believe each other. Okay, so setting up a partnership business is purely based on the mutual trust. That is very essential. You should have a trust, a hope, a belief on the person. You should have the trust and hope and belief that yes, I firmly believe this person. Okay, I even if I'm not there in the business, he will take care of the business and he will maintain the accounts properly and he will furnish the document everything without any malpractice. That mutual trust is very essential in partnership business. ஒருத்தர நம்பிக்கை, ஒருத்தரை நம்புறது தான் பார்ட்னர்ஷிப் பிஸ்னஸ். Right? Hello.
Yes, sir. Yes,
So
sir.
that's all. So the relationship is principal and agent relationship, and the most essential thing that is required to set up a partnership business is mutual trust. And what happens? Okay, if you have others, if you have more, okay, more and more trust on a person blindly and not monitoring the things. For example, you trust a person to the core blindly and you are not monitoring the okay business performance or you're not taking part of your business and all, then what happens? The business will also get into an end or it will also come to an end. That is, the act of one partner will bind the entire partnership firm as a whole. Okay, this is also one of the most important objective which you have to keep in mind. The act of one partner. So that means in partnership, basically a person, one particular individual is called as a partner and collectively they are called as a firm. Okay, so in partnership, individually, okay, individually each partner, okay, individually each person is called as a partner, whereas collectively they are called as a firm. Okay, collectively they are called as firm. So in a partnership business, individually each person is called as a partner. Okay, let me make this as person. Each person Okay, each person is denoted as a partner, and the same, okay, persons collectively they are put together, they are called as a firm. So here you have to understand the act of one partner will bind the entire partnership business as a whole. Okay, this is very important and this can come as an objective also. The act of one partner, the act of one partner can bind the entire partnership firm, entire partnership firm as a whole. So if any mistake or if any, okay, illegal activities is being performed by one particular partner, and if that gets reflected, then it will affect the entire partnership business also as a whole. So again I am repeating some important terms which we have discussed so far. Okay, in partnership, this is basically a business which has been carried out by two or more people in order to earn a profits by carrying out a legal business. And minimum we require 2% and maximum is 50%. And the entire partnership business is governed by an Indian Partnership Act of 1932. But this Indian Partnership Act 1932 does not prescribe any maximum number of members to be in the partnership firm. It is only the Companies Act of 2013 which insists that the maximum number should not cross 50. And according to the Indian Partnership Act of 1932, Section 4 talks about the definition of partnership. In partnership, the definition is quite simple. It is a relationship between the persons who have agreed to share the profits of a business carried on by all or any of them acting for all. And with this definition, we also came to an understanding that what sort of relationship it exists among the partners. It is the principal and agent relationship. And what is essential to set up a partnership business? It is a mutual trust, understanding. Okay, the other way of mutual trust is understanding. You should understand each other, and in partnership, individually, each person is called as a partner, and collectively, they are called as a firm. Okay, so these are some of the essential things which you have to understand. And you may ask me a
Okay.
question: can a minor, okay, can a minor be entitled to be a partner? Yes, a minor
Yes,
is
sir, but the
allowed.
laws.
A minor is allowed to be a partner in the partnership business only for the benefits of the firm, and he can't be asked to take up the losses or to bear the losses if there is any. This is point number one. Point number two, a minor can express his interest to continue as a partner in the firm after attaining the age of 18. That is once he turns into a major. But if in case he or she does not give any consent, interest, or does not give any reply within 6 months after attaining the major, then it is understood that they are accepted to continue as a partner. In the concept of silence is also a way of acceptance. So if you are really interested to continue as a partner, you have to give your consent. If you are not interested to continue as a partner, then you have to give your consent like you don't want to continue as a partner. So a minor can be allowed to take active participation only for the benefits of the business and not for any losses. So they may ask you a question. So can a minor be a partner in a firm? Yes, a minor can be a partner in a firm, but only for the benefits of the firm and not for any losses. This is also an expected question. Okay. So the question can be asked: can a minor? be a partner in a firm? Or they may ask, can a minor be admitted as a partner in a firm? Either way, the question can be asked. Okay, and for this, the solution is yes, a minor can be admitted as a partner in a firm only for the benefits. Okay, that is very important. Only for the benefits of the firm. Okay, he can be admitted as a partner only for the benefits of the firm. And the most important thing, the special note is very, very important. Keep it in mind. After becoming a major, okay, after becoming a major, the minor partner must give their consent. Okay, after becoming a major, the minor partner must give the consent whether are they interested to carry on the business of partnership or not. Failure to provide such notice, okay, failure to provide such notice ensures that the minor partner is interested. Can you able to understand what I'm mentioning here is the special note?
Yes, sir.
In general, a minor partner is allowed to
Uh,
be a partner in the firm, and once he or she has become a major, they should definitely give a consent, their interest, whether are they continuing the business as a partner or they don't want to continue as a partner. If they don't give any such interest, okay, எதுவுமே சொல்லல, விருப்பமே தரல, கண்டினியூ பண்றேன்னு சொல்லல, கண்டினியூ பண்ண மாட்டேன்னும் சொல்லல, சைலண்டா இருக்காங்கன்னா, it is understood that they are taking over the partnership business and they are continuing as a partner, and from that day onwards they are liable for the firm's liabilities. Okay, so that's what it said. If they fail to give, okay, provide such notice, it ensures that the minor partner is interested to carry on the business as a partner, and okay, becomes liable to all the actions of the firm. Okay, now they may ask one more question. What is the timeline given for that particular minor partner to give their consent? So the timeline is how many months? What is the timeline?
6 months, sir.
Very good. Okay, so that is very important. So within 6 months, it should be given. Okay, so within 6 months, he or she must give their notice. Okay, this is very, very, very important. Now, can you able to understand about partnership in general, the meaning, the feature, and then what is the relationship and essentiality? Okay, all those things. Any doubt in this?
Yes, sir.
Okay.
No, sir. No, sir.
Now, so we'll move on to the second category for the day. So we have completed the meaning and also we have completed the definition segment. Now let's
Sir,
come to
can
the
you go a little bit down, sir?
yeah,
Within
yeah,
6 months?
yes, 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 yes. So within 6 months, he or she must give their notice whether they are ready to take over or they are not ready to take over. That notice should be given within 6 months.
Got it, sir.
Okay. Now let us discuss about the second segment, that is importance of partnership deed. Importance of partnership deed. So before going for the importance, we should know what is a partnership deed in general. So what is partnership deed if you ask? It is nothing but a written agreement. A written agreement among all partners. Okay. So in general, you say partnership is nothing but it is a written agreement among all partners with respect to the following items. Let us see what are those items. I'm not going to say in detail as we are just going to have an overview of it. Okay. So what are they if you see? Particularly these 5 6 items are very important. Okay. According to that, number one, the share of profits and losses. Share of profits and losses among the partners. So, as I said, partnership is nothing but it is a written agreement. Okay, so basically, agreement is you both or you two people or three people who how much ever is there in the business, you are agreeing among yourself. Okay, so what should be a profit sharing ratio? So, it is a written agreement among all the partners with respect to the following items. So, among the items, the first item will be as the share of profits and losses in which ratio they are going to share. Are they going to share the profits and losses equally, or are they going to share in the ratio of their capital, or are they going to share the profits in some agreed ratio? So when it comes to the profit sharing ratio, okay, so this particular concept, share of profits and losses, this talks about the profit sharing ratio, PSR, which we talks about. Okay, so PSR is nothing but profit sharing ratio. This profit sharing ratio can be either in the deed they can mention as equally, so it can be equal, or in the deed they may mention that in some particular ratio, say for example, okay, in 2 is to 3 is to 1 ratio. Imagine that there are three partners and it is mentioned in the deed like they are going to share the profits and losses in 2 is to 3 is to 1 ratio means, then such type of ratios we call them as agreed ratio. These type of ratios we call it as agreed ratio. Or the third type of ratio which we have it is, imagine that there are three partners A, B, and C. Okay, A, B, and C, and these partners has got the capital invested in the business amounting to rupees 1 lakh, rupees 2 lakhs, and rupees 2 lakhs. And it is mentioned that they are going to share the profits and losses in their capital ratio. If that be the case, then that capital ratio will be in such a way that eliminate the common zeros among the capital values of each partner, and whatever is left over, and that will be your capital ratio. But ensure before you declare that as a capital ratio that if it can be further simplified, then to the maximum extent you have to simplify those and then give your answer. In this case it is 1 is to 2 is to 2. So in profit sharing ratio you have three different types. One is equally, the other one is 2 is to 3 is to 1, something like that. If they are quoting some ratio, then we call that as an agreed ratio. Or if it is mentioned as in the ratio of the capital means, then we call them as the capital ratio. Am I making sense to you?
Yes, sir.
So this is with respect to the profit sharing ratio. Okay, the second important thing which we have to see in the partnership deed, or we have to make it clear in the partnership deed, is about the interest on capital. Okay, interest on partners capital. Always remember, I'll give you an example. I have 1 lakh rupees in my hand. I have two options. Either to go and invest this 1 lakh rupees in a fixed deposit in a particular bank, whether nationalized bank or private sector bank. The bank provides me a periodical return in the form of interest, and my principal amount, what I invested in that particular deposit, will always remain safe. So my principal amount is also safe, and I'm getting a return, the reward in the form of interest. This is one option. The second option is, one of my friend is asking me to join hands with him and to set up a business in partnership mode. And he say a minimum investment of 1 lakh is enough, the same amount I have in my hand. So now I have a dilemma whether to go with bank investment or to go and start up a business. Okay, I'm taking a call of starting a business. Then there are possibilities or the risk involved in the business. Whereas if I invest in any of the bank schemes, there is not that much of risk involved, whereby the safety for the money what I have invested is damn sure. So in order to give some leverage, or in order to make the owner, the proprietor, in a comfortable zone, the business provides interest on capital. But it is not compulsory that every business should have to provide interest on the capital. It depends upon the policies of the business. And in partnership, providing interest on the partner's capital is up to the partner's decision. So when they are deciding about the interest on capital factor, they'll make it clear whether are they going to allow in the beginning of the year, so that is from the first year onwards, or it can be allowed but not immediately. First let us see the business progress for the first 2 3 years. Depending upon the business growth, then we'll consider about providing interest on capital. So like that they may take a call. ஆரம்பத்தில் கொடுக்க வேண்டாம், ஒரு 2 3 வருஷம் பிஸ்னஸ் எப்படி போகுதுன்னு பார்ப்போம். அது நல்லா போச்சுன்னா அதுக்கப்புறமா இன்ட்ரெஸ்ட் ஆன் கேபிட்டல் கொடுக்கறத பற்றி யோசிக்கலாம் அப்படின்ட்டு சொல்லி சப்போஸ் பார்ட்னர் டிசைட் பண்ணாலும் பண்ணலாம். So interest on partner's capital is purely provided for the money invested by the proprietor, the owner in the business, and this is purely calculated on the opening capital, and it is also calculated on the additional capital. never it is calculated on the closing capital. So whether the partners are entitled for interest on capital or not, that will be mentioned in the partnership deed. Okay, so with respect to interest on partners capital, okay, you have to understand, like, in a partnership deed, when you are going to talk about this interest on partners capital, you have to make sure whether are you allowing it yes or no, whether it is allowed or no. If you are going to allow interest on partners capital, then you have to keep this very careful. You have to remember this. If you are going to allow interest on partners capital, yes means then it is always allowed on opening capital. And if suppose the partners have invested any additional capital, even on the additional capital it is allowed. Okay, so interest on capital, if it is allowable as per the partnership deed, then it is allowed on the opening capital and, okay, on additional capital. Additional capital introduced. Okay, this is something you have to keep in mind. It is allowed on the opening capital and on the additional capital introduced. But what is not allowed, that is what is something you have to keep in mind. Never it is computed. Okay, never it is allowed on what capital? Never it is allowed on
Closing cap.
closing capital. Okay, so if the partnership deed is allowing you to calculate interest on capital, yes, you can go and calculate interest on capital, but it should be calculated only on the opening capital and on the additional capital if at all there is any, but never it is allowed on closing capital. Okay, in addition to this, you should also remember one thing: there is a condition. Okay, what is that condition? It is allowed only when business earns sufficient profits. When interest on capital, okay, when interest on capital is considered as an appropriation of profit. Okay, when it is considered as an appropriation of profits. Okay, that means, I repeat it, interest on capital is a concept, and this concept will be mentioned in the partnership deed, should have been mentioned in the partnership deed. If it is mentioned in the partnership deed, like, yes, provide interest on capital, then you have to make one thing very careful, make one thing very clear, that it is always allowed on the opening capital and on the additional capital introduced, but never on the closing capital. This is point number one. The most important condition is, even though the partnership deed has given permission to calculate interest on capital, but only if this condition is satisfied, you can provide that interest on capital, or else you can't allow interest on capital. What is that condition? It is allowed only when the business earns sufficient profit. Okay, when interest on capital is considered as appropriation of profit. So as I was saying you, that we have two important terms of discussion. One is appropriation of profit or charge against profit. If suppose interest on capital is being mentioned in the question as it is an appropriation of profit, then in that situation you have to keep this condition front, and you have to check whether the business has sufficient profit or not. If it is a charge against profit, then you need not bother about this condition. நான் சொல்ற புரியுதா?
Yes, sir.
Okay, so interest on capital. Okay, you will allow it on the opening capital and on additional capital, never on the closing capital. The most important condition to be kept in mind is your business should have sufficient profits. Only then you can calculate the interest on capital, provided if interest on capital is mentioned as appropriation of profit. If it is a charge, least bother about this. Okay, so this is with respect to interest on capital. If the partnership deed says very clearly, no, don't allow interest on capital, then you will not allow interest on capital. And in that situation, you need not go and break your head to go and search for opening capital condition whether to be checked or not. When the partnership deed says very clearly they are not supposed to provide interest on capital, then you least bother about those things, forget about those things. Okay, now comes to the next important, okay, what terms, interest on, okay, interest on partners drawings. Okay, interest on the partners drawings. So even in this you can see, if partnership deed says yes, you have to collect interest on the partners drawings, then you'll do the needful, you'll collect it. If the partnership deed says no, need not charge any interest on drawings, then you won't collect any amount. And remember, what is the difference between these two? If you ask, interest on capital, interest on drawings means this interest on capital is considered to be as, okay, this is considered, okay, this is considered as an expense, okay, to the firm. It is considered as an expense to the firm and an income to the partner, income to the partner. On the other hand, this interest on drawings, it is considered, okay, it is considered as an income to the firm and an expense to the partner. புரியுதாம்மா?
Yes, sir.
Can you able to understand how, what makes the difference between these two? Interest on partner's capital is considered to be as an expense to the firm, but it is an income to the partner, whereas interest on partner's drawings is considered as an income to the firm but an expense to the partner. Okay, if suppose the partnership deed mentions that yes, collect it, okay, he has given the permission to collect, then you will collect interest on drawings from the partners on the amount of drawings what they have done. Okay, so if it is saying yes, then collect interest on drawings from the partner on the amount of drawings. So you'll collect interest on drawings from the partner on the amount of drawings made by each partner. Okay, if it is no, then don't collect. If it is not allowing you to collect, no means then don't collect interest on drawings. Okay, don't collect interest on drawings. Okay, now the most important thing which you have to understand is between these two things, interest on partners capital and interest on drawings. The interest on partners capital will also be mentioned in some percentage. It will be mentioned as some percentage, 5% or 10% or 15% according to the problem. Similarly, even the interest on partners drawings, this will also be mentioned in some percentage. Most of the problem it will be mentioned in some percentage. Very rare in some problems they may give you the value straightforward, but 99.9% cases it will be mentioned as a percentage. I will make it clear to you what is the difference between these two. In both, interest on partners
Yes.
capital and drawings will always be mentioned or quoted in some percentage. Okay, now I've given the criteria, condition, everything to you. Here if you see, okay, for charging or for collecting the interest on drawings, you will collect it on the amount of drawings made by the partner. And in this you have got different methods. Okay, in this if you see, basically I got two methods. Okay, for collecting the interest on what? Interest on drawings, you have got two methods. Let us discuss on those methods. Okay, so methods, okay, of interest on drawings. ஸோ ட்ராயிங்ஸோட இன்ட்ரெஸ்ட் எப்போ கால்குலேட் பண்ணணும்னு தெரிஞ்சு போச்சு. இப்போ அந்த இன்ட்ரெஸ்ட் கால்குலேட் பண்ணுறதுக்கு மெத்தட்ஸ். ஓகே, மெத்தட்ஸ் ஆஃப் interest on drawings. So how many methods are there? If you see, two methods. Okay, we have got two methods. What are those two methods? If you ask, they are one, it is simple method or the product method. Okay, simple or product method. This is one method, and the second method is average period method. Okay, these are the two methods which we have to calculate interest on drawings. Now, to apply this method, there is one condition. What is that condition if you ask? Okay, there is a condition. The amount of drawings, okay, and the date of drawings. Amount of drawings and date of drawings should not be same. Should not be same, which means uniform. Okay, that is, it should not be uniform. If it qualifies this particular condition, then you can go and apply the simple method or the product method. Am I making sense to you? I repeat it. Interest
For
on,
example,
yeah, I'll come again. So interest on drawings, if you see, okay, if the partnership deed is allowing you to calculate the interest on drawings, yes, you can go and collect the interest on drawings from the amount of drawings done by each partner, and the interest on drawings will be mentioned in some percentage. And for calculating the interest on drawings, there are two different methods which is available. They are one, simple method or the product method. The second one is average period method. If you want to go ahead with simple or product method, then there is some condition which it has to fulfill. The condition is the amount of drawings, whatever the withdrawal that you have done, the amount of drawings and the date of drawings should not be the same. Okay, that is, it should not be uniform. Okay, that means it should not be same. Okay, I have mentioned as that is uniform. Okay, that is not uniform. Okay, that is not uniform. It should be of different dates and different amounts. Is it clear to you? Is it clear to you, ma?
Yes, sir.
Okay.
Sir, but example, sir.
Example, we are going to work out the problems, don't worry. It is like
Okay.
example tell, okay, like they'll give a problem, like how many partners are there in a business and who are the partners done the drawings, on which are the date they have done the drawings, what is the amount of withdrawal on each particular date, and they have been asked you to calculate the interest on drawings. So by analyzing all those things, you'll take a call whether what method you have to use it, okay, for this particular problem. So it is the date and the amount should not be the same. That is a condition. Now coming to the second one, average period method. For this, you have a condition. Okay. For this, there is a condition. What is the condition if you ask? Amount of, okay, amount of drawings and the date of drawings. Okay, both amount of drawings and date of drawings should be same. Okay, there you are mentioning as should not be same. Here it is should be same. Okay, or probably let me make this in the other. Okay, drawings should be same. That is uniform. Okay, and for this there is a clue. To apply this method, there is a condition. There's a condition, and you have some clue words. Okay, or we say it as key terms. Okay, so clue words, or we can otherwise say it as key terms. Okay, what are they if you ask? It's quite simple. If you come across the words like this: beginning, middle, end, monthly, quarterly, 6 months, half yearly, 9 months, then this method will be applicable. Okay, so the key words or the terms or the clue words are beginning, middle, end, monthly, quarterly, 6 months, half yearly, 9 months. If you come across these terms, then obviously you have to use the average period method, and there is a table value which we will be using it for problems to be worked out under this method. I'll give you a table value also. Kindly make a note of this table value now. When we work out the problem, it will be more useful. Okay, the table values. Okay, so average, okay, average period method table value. So have the heading in such a way on the rows. Okay, it will be like row and column. Have it as beginning, middle, end, and in the column wise you make it as monthly, then you make it as quarterly, then you make it as 6 months, then you make it as half yearly, and then okay 9 months. Okay, so these are the things which you have to keep it: quarterly, sorry, monthly, quarterly, okay, 6 months, half yearly, and 9 months. Is it clear to you? Is this clear to you?
Yes, sir.
Okay, now
Yes, sir.
the table values are: for monthly beginning it is 6.5. Okay, the table value is 6.5. Okay, I repeat it, it is 6.5. And in the middle it is 6, and towards the end it is 5.5. Okay, so 6.5, 6, and 5.5. Coming to quarterly, the beginning 7.5, middle is 6, and towards the end it is 4.5. Coming to 6 months, it is 3.5, 3, and 2.5. Coming to half yearly, the values are 9, 6, 3. And finally, coming to 9 months, it is 5, and then 4.5, and then it is 4. Okay, so this is the table value which you have to keep in your mind, right? So table values, you just memorize it for the time being. We'll discuss how we derive this table value and how we are using this table value in the problems based on the keywords, right? So this particular thing you have to keep in mind. Okay, so as I mentioned here, it is monthly, quarterly, 6 months, half yearly, and 9 months. Right? Any doubt up to this? If you have, please let me know before we switch over to the next concept. Okay. So,
Understood, sir.
up to this, no doubt, right?
No,
Okay.
sir.
The next one, okay, which we are going to see is in the concept of partnership deed, the fourth item: A, B, C, D. A, we discuss about share of profits and losses. B, about the interest on partners capital. C, about the interest on partners drawings. Okay, and now the D item. Okay, it is about the partners remuneration. Okay, partners remuneration. Okay, so partners remuneration is nothing but it is the salary or the commission. Okay, so partners remuneration are of two types. Okay, remuneration are of two types. One, it is salary, and the second one is commission. Okay, so partners remuneration is basically of two, that is salary and commission. These two consist of the partners remuneration. So kindly copy it up to this, and we'll stop it for day over here. If you have any doubts, kindly let me know, and then we'll close it for the day. The rest will continue in tomorrow's segment. If there is any doubt, please do let me know before we close the segment for the day. So the partner's remuneration, as I mentioned it, it is of two types. One is salary, and the other one is commission. Okay, we'll discuss about this in detail in tomorrow's segment, right? So kindly copy the third one. Hello. Yeah. Yeah. Hello. Yeah. Yeah. In between, my network has got disconnected, so that's the reason. Okay.
Okay.
Yeah. So just to copy it off, I think I'll share my screen just a minute. Okay.
Yes,
Let
sir.
me let me share my screen. So can you able to see my screen? Yeah.
Yes, sir.
So the D segment is about the partner's remuneration, which is of two types. One, it is a salary. The other one will be a commission. So with this, I'm stopping it up. You just take these two terms, salary and commission. We'll discuss about how to compute the salary of a partner and how to compute the commission of a partner, where we have to see few important terms like monthly salary, quarterly salary, or half yearly salary, or annual salary. And commission is also of two types, whereby the commission before and commission after. So where it is having some bifurcations, we'll have a more detailed discussion tomorrow. The same time we'll have a class and we'll discuss upon it.
Okay, sir.
Okay.
Okay,
So
sir.
I hope up to this you don't have any doubts. I hope you all have taken the
No,
notes
sir.
also parallelly, right?
Yes, sir.
Okay, Kana. Thank you.
Sir, how to access your this thing here, recorded class,
I'll be
in case for any
no,
doubts?
I'll be uploading it in my SharePoint, that's in my YouTube, and I'll be sharing the link to you. And also, okay, you can get your pen drive when you come for the offline class on Sunday. Okay, where I'll just give all those classes whatever we had it in that particular week. I'll dump it in a pen drive and give it to you as a day wise. So from that you can take it up.
Okay, sir.
Yeah.
Thank you, sir.
Okay. Thank you. Welcome, Kana.